Calculating the bottom of the market, there's many indicators, obviously, that we can use to calculate that. But one of the main indicators is how many houses are being sold on any given month. And when I was in Dallas, the economist Elliott shared this with me, and I dove into it a little more because I wanted to understand it in great depth as to historically where we have been in the amount of houses sold within any given month to determine the bottom of markets. So if you look at here, this is back to 1980. Up until 1995, we very rarely hit the $4 million, 4 million transactions in a monthly basis, houses being sold on a monthly basis. So it's right here, the 4 million transactions within a month, and then it dips back again. But in 1995, it hits a high and it just kind of stays and continues to drive up. Now this high, the highest number was 7.2 million. That was in 2005, 7.2 million homes sold in September of 2005. That's when the recession happened. So then we had a lot of things going on in our market. There was many lending issues. There were many housing issues. They were building houses faster than people could buy them. So we had a serious a supply issue. We had way too much supply for the amount of people buying homes at that time. And that created this big lull, this very volatile time. This was 2008 to 2012. 2012 is when they put the lending rules in place. They came up with a qualified mortgage, became very safe to lend money. And you can see once we got out of this recession, we only hit under 4 million transactions twice in the Great Recession. That was 2 times that happened. At that time, we also had less population in the United States than we do now, about 10% less in people than we do in today's market. But if you notice, there's a big low, lots of volatility here going through the Great Recession. Then we hit 2012, Dodd-Frank hits, lending becomes safer, and we normalize. And we stayed up in the 5 million range, 5 million houses being sold on a monthly basis, all the way up until we hit the pandemic. When the pandemic hit, in March of 2020, there was a lot of uncertainty, and you can see this huge dive down in houses being sold. We just hit that 4 million mark again, right below there. We were at 3.9 and in May of 2020. Then they came in, lowered interest rates, and we saw a huge spike up in the amount of houses being sold, actually higher, almost as high as right before the market really dove down in 2006. We saw 6.6 million houses sold in the month of November of 2020. So kind of hanging out here. There's some normal fluctuations around the 6 million mark, but then we hit the 2022 where the interest rates shot up. We were in the 7s. We hit even 8s at one point last year. And this is where we had this huge dive down in the amount of houses being sold, again, hitting just below the 4 million houses being sold in a month. We are now hanging out there here again. We're right around the 4 million houses being sold on a monthly basis. We're feeling that in our industry. We're feeling the amount of houses being sold much lower right now. But I show you this because if you notice, if we look at a 15-year mark, just to get a little closer, every time we go below 4 million, we spike back up. Here again, we hit 4 million, we spike back up. We hit it again right here in the pandemic. We hit 3.9 and we spike back up. So what's keeping us low right now in the amount of transactions being sold is the affordability markers that we're having to watch. They're hoping that interest rates coming down do help that. But because we have so many people and our population growth is so high, we do expect values to go up. And frankly, if you wait for values to go up and interest rates to come down, you're going to have a higher payment, even with a lower interest rate at a higher price. So really, it's a unique time. It's a great time to pick up real estate because you can always lower your payment through lowering your interest rate in the future. There's even great opportunities now to buy the rate down into the 5s and just get a lower rate now with seller credits and so forth. So a lot of opportunities to get into the market right now. What's most important is to understand, where do you want to be on a monthly basis? Find that sweet spot number, and let's make sure we can get you there now, because really is a good time to pick up some real estate. And that is right now expected to be a new bottom. Talk to you soon.